Hi everybody, good week. Vladimir here with you and welcome to the weekly review of the second week of October. If you remember the last week review, I was talking about the critical levels that the market is reached, and especially on the Australian dollar and the euro dollar and the British pound dollar. And we talked about this level, and we say that probably we will see the correction start to begins to appear, and we will see the bears come to the market. As you must remember, and if you follow my blog, you must notice that mentioned that previous week was opened with the correction, and the euro and Australian and all the majors lost many pips. And you can see here the Australian. Take a look what happened here, right? We lost more than 150 pips correction until the uptrend line and the 20 moving average of the Bollinger. So what does it mean? As I told on the last week, on the previous week, look at the MACD, guys. You see this? This weakness will bring a serious downtrend, right? There is no will it happen? It's the only time when it will happen. And as I mentioned on the previous week, this is the beginning. This is how the downtrend looks like. This is how the beginning of the downtrend, the upcoming downtrend, looks like. Because take a look on these spikes. These spikes, 1, 2, 3. You see these tails on the candles, right? You see it? Watch it, right? That means that the bulls are getting out, that bulls closing positions. That means that very soon the bears should come in. You can see the same on the euro dollar. Take a look, right? Take a look, right? You see this weakness? And I just want to mention that this weakness, right? This weakness will definitely bring the downtrend. I'm not sure that this will be the U-turn on the total market, but it will definitely bring a big correction, something between 500 to 1,000 pips. This is my guess, right? And now, if you just watch it, right? Take a look what happened on the previous weakness. We got up until it was, resistant, and bam, down, and now again, okay. We're going up, and now it looks like 140 is the hard resistance, but it will bring soon downtrend. All right. So what else happened in this week? As you must mentioned, on Friday, on the non-farm payrolls, USA lost 95,000 jobs. 95,000. It was while all the analytics were expected to see little loss, or some of them even expected little addition. So, just do you understand what happened? 95,000. And what Obama have said about it, and what Geithner said about it, that if not their help, Washington assistance, the situation were much better. My guess, the market will keep going up. Alright? I'm not talking about the short term, the correction, all this stuff. I'm talking about the total trend, right? I think the market will going up. And why that? Because there is nothing more to do. Right? Like lie. Listen to this word. There is nothing more to do like lie to the market. And before all the election stuff and all this program, before all this real election and all the speculation about it, there will also a rise on the market, and that's why I believe this will be the most liable, the biggest lie in the market. We will see uptrend, but it is not an uptrend because there are no volumes, there are no real bulls. It's all about lying, and be careful with it. Right? Be careful. Be careful, guys, because if you watched my blog during the week, I updated this this week with a topic called be careful. Okay, as I said again, be careful. Why that? Because we reach critical, very critical levels, and these levels, the sharks, I call them, right? The big players, the banks, are looking for your stop losses. That's why you must be careful. What does it mean? Don't put short stop losses. Okay, don't look to be in a trend. This is the end of the trend. Don't look to and to join now for another 1,000 pips. Will not happen unless you trade without stop losses, right? Don't look to do it because it's very, very, very dangerous. And with this saying, I go over the chart now, and I will mention my opinions. Take a look, 140. This is the I'm talking now about the euro dollar and the daily chart, right? 140 is the first level. As for now, it's tapped. We got double doji, right? We get double doji. You know what to do if it breaks down. If it breaks down, that probably we will see correction of this pair. And it looks like it's the right time. If not, and if it breaks up the 140 on the upper boundary of the double doji, we will probably go to 142, which is the next and the most powerful resistance. My guess, we will see it reached. I'm not sure. I'm not sure that it will happen before the correction, right? So if we break down the boundary of the double doji, sell. If we work up, you can look for intraday, only intraday up moves until 142, and from 142, this is the maximum. This is the maximum stop. I see the euro goes. The Australian, I remind you, okay, that the investors are aiming one equal level. That one Australian will be equal to $1. This is very, 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 very critical, powerful psychological level. If it reached, probably we will see a serious boom down. Watch again, watch this weakness of the MACD and watch what happened on the previous moves. You see here, it kept going up while the MACD was going down, and bam, serious fall. Same here. You can see here the same situation. You see, the chart was going up, but the MACD was going down, and bam. You see, so it will definitely bring a U-turn situation. I will not promise and guarantee total U-turn, but it definitely will bring 500 to 1,000 levels. So the euro is the first one to look, the Australian is the second one to look, and if it's not breaking this level, look for this uptrend, this short uptrend. If it will be broken, then sell. Right? This is the Australian. What next? The next one is the New Zealandian, the same situation. Take a look on the MACD, it's going and losing power. It will definitely bring down move. But for the New Zealandian, I'm not sure about the levels because 75, 60 this level is a resistance right here, 75.50, and also we have one more higher. I don't know. I prefer not to touch this pair. The dollar yen, guys, I mentioned last week. I prefer not to touch it. Sorry, 2 weeks ago. I don't know. I don't understand this pair. I guess we will see. We will see the government involved again, but I'm not sure. And as for now, I just want to finish with these two because a euro dollar and Australian dollar, from my point of view, are the most important. About the gold we were looking for, nothing yet happened, no bearish weekly pattern, so don't look for selling yet, just enjoy the intraday up moves. When it will bring and bearish candle pattern, sorry, then we will sell it. And with this saying, I just want to add something, guys. Don't forget the investors. Once a while I bring you the targets of the investors. The basket of the euro and the franc, right? The basket of the euro dollar and dollar franc, they're aiming 100. That means that they're reaching the targets. Australian dollar, they're aiming the equal level. Dollar yen, they're aiming 75. The investors, the big investors. And the dollar Canadian, they aiming the equal level as well, and then 0.95. So remember these levels because the investors rule, right? Investors rule, and if you want to behave like investor, just just remember their goals because on 95% the markets reach their targets. That's all. This was my little bonus for you with these targets. I wish you good luck, guys, and thank you very much for your time watching my weekly review. Vladimir.